It's been far too many moons since I last looked at classic equity dividend ETFs, and in this video I plan to rectify that. Now here's a list of a few equity dividend ETFs, and we can see how it just goes on and on and on, so there's lots of options to choose from. And here I just want to give you guys my perspective on what I look for when it comes to finding the best dividend ETFs on the market. Because for me, I go way beyond the chart, the expense ratio, and all that basic stuff. Of course, it plays a big role in my determination, but I've developed a proprietary ETF evaluation method, and that's what I want to go over in this video. And of course, if you guys enjoy the content, leave a like, subscribe, helps me out a lot with the YouTube algorithm, and I greatly appreciate it. But let's get started. Okay, so I actually want to begin with this article from CNBC titled "Dividend ETFs are gaining more attention. Here's a key distinction to understand when investing." Dividend ETFs have seen significant inflows since inflation concerns spiked in 2021, with many notching gains greater than 20% last year. In 2021, DGRO rose 24%, Noble 23%, VIG 22%, and SDY another 22%. As flows into these funds accelerate, it's more important than ever for investors to understand the difference between two main types of dividend ETFs. The key distinction here is the difference between high-yielding and dividend growers. ProShares Noble ETF tracks companies that have not just maintained, but have grown their dividends for at least 25 consecutive years. That tells you got staying power in a name, and that you've got the important ability to grow those dividends through a cycle. So that article is trying to say that not all dividend companies are the same, and they break it up into two main categories: dividend growth and high-yield companies. So here as an example, VIG and DGRO are both examples of dividend growth companies, and this is the price history over the past 5 years, and they've both done extremely well, up around 80%. And in contrast to that, VYM and HDV represent high-yield ETFs, and here the price performance is significantly less. Now keep in mind this is just the price history, but even if we look at the total returns, which takes into consideration the higher dividend payment, the dividend growth names over the past 5 years still have slightly better performance. And to confirm this trend, we can take a look at some more historical data, and this proves that dividend growers and initiators tend to, over long periods of time, outperform even the market. So for me, when it comes to my dividend investments, I don't just look at the past performance, but I break them up into different categories based off of their different characteristics. And in my opinion, in addition to growth and high dividend companies, there's actually two more groups you can break dividend companies into. So the next one I have here is quote unquote high quality dividend companies. And this segment can be represented by QDIV and SCHD. So when it comes to these ETFs, they don't necessarily focus on dividend growth or having a super long track record of paying dividends. They do take those into account, but they focus a lot on financial ratios to indicate the health of the overall company and its ability to continue to grow the revenue and pay increasing dividends. So as a quick example, for SCHD, this is their methodology. So they do look at things like the consecutive years of dividend payments, and these are the financial metrics they look at. So things like free cash flow to debt, return on equity, indicated average dividend yield, and the 5-year dividend growth rate. For QDIV, they do have two main filters, the dividend yield and the quality. And here they focus on return on equity, accruals, and financial leverage ratio. Now, unfortunately, QDIV isn't quite 5 years old, but it does track pretty closely to SCHD. And in terms of the price appreciation, SCHD went up 80%, which is right in line with the dividend growth ETFs. And taking a look at the total return of SCHD over the past 5 years, so including that dividend, the annual return is actually the highest yet at over 16% annually. And then the final group I have here after high quality and the classic dividend growth and high yield names is what's known as enhanced dividend ETFs. And the example here is DIVO and XYLG. In terms of the price performance over time, it's not super great, it's more in line with the high yield names, but the way these work is that they purposely limit some price appreciation in exchange for very high enhanced dividend payments. And that's why if we look at the total return, it's much better over time. So there you have it. That's basically the filter that I look at all dividend ETFs through. We have dividend growth, high yield, high quality, and then enhanced dividend. Now to quickly give my opinion on each category, when it comes to dividend growth, of course, their price appreciation is awesome. They focus on having a fast growing dividend, but keep in mind that the starting yield is very minimal. In fact, if we take a look at VIG versus the S&P 500, they're almost the same investment, and the dividend yield is also very similar. Now, achieving total returns that match that of the market is great. I'm not trying to discount that, but with the way that I invest, I have dedicated growth growth investments, and thus the capital that I allocate towards my dividend investments, I want to actually produce a meaningful yield. So dividend growth as a strategy is fantastic. All the data we looked at backs that up. And if you have a super simple portfolio and you can only invest in a couple of ETFs, these could be a great all-around choice. For the high dividend group, I also don't prefer these because the dividend yield really isn't that high and the performance overall isn't great. Coming down to the quote-unquote high-quality dividend names, QDIV and SCHD, if you want just a plain equity ETF, I think these are probably your best choice in the dividend sphere because they kind of combine both of the positive characteristics of the above two groups. So their price appreciation is very competitive and their starting dividend yield is a bit more meaningful, at least in my view. And then finally, the enhanced dividend group. I think you guys know my opinion on this, so I'm not going to dwell on it too much, but I'm a big fan of this category. Yes, the price appreciation isn't great, but because of the high monthly dividend payments, the total return does end up being very competitive. Plus, with the way I invest, I'm not a pure income investor, so I do have growth assets, which helps to boost the appreciation of my overall portfolio. And I rely on the enhanced dividend yield to boost the overall income in that portfolio. So I have to say, I'm glad to see that dividend investing as a whole is making a comeback in the current market. Dividend investing tends to be viewed as a very boring way to invest, and often exciting growth companies can overshadow them. But you simply cannot deny the long-term performance of dividend investing and the overall impact dividends have on stock market returns. Not to mention, dividend investing in and of itself can be very fun and addicting. Getting monthly or quarterly dividend payments automatically deposited in your portfolio is super motivating. I found this nice article from Fidelity talking about some of the key benefits of dividend investing. So they're essential to stock market returns, accounting for approximately 40% of the overall stock market returns since 1930. During periods of high inflation, aka like right now, stocks that increase their dividends the most considerably outperform the market on average. And the extreme regularity of dividend payments help to reduce overall volatility when investing in the market. So hopefully that gave you guys some insights on how I view, categorize, and rank different dividend investments. And just like I do with all of my videos, I'll leave my current portfolio linked down below so you guys can click on the link and see exactly what I invest in personally. But that's gonna do it for the video. Hope you guys enjoyed. If you did and you're still watching, definitely leave the video a like, subscribe, all that kind of YouTube stuff, and I'll see you guys in the next one.